Hey, everybody. Let me know in the chat if you can see me, if you can hear me. All right. So I think we are all set. Let's see. I see a heart here. So I think you can see me and hear me. Let me know if that's not the case, or let me know if that is the case, just so I know that this is streaming. I have some new technology today. So let's kick it off. 12:01. I know we missed a week or so. And also, I hadn't been trading the past couple weeks. So a few weeks back, I had some, I think I had Mara put, and it had expired worthless, or I bought it back and closed that position for a realized gain, and haven't traded anything since. And I'm kind of glad that I haven't, because if I look at Mara, let's see, I think you guys can all see my screen. Hear you perfect, see and hear. Your technology is working great. Thank you. Thank you for being here, and thank you for letting me know. We can see Mara kind of dip down. So I want to start off with a couple of things. Number one, I often get the question on, selling contracts for 1 week versus 2 weeks versus a month versus 3 months. The longer you go out when you sell a contract, you do make more money. However, you have more risk the longer your contract goes out. And this is a perfect example. Like, looking at Mara for the past couple of weeks is a perfect example of that. Had I, let's say, gone out a little bit longer and made a little bit more income, then I would have to buy shares of stock, in which case, instead, what I did was just going out a week, it expiring worthless, or buying my position back and closing that and going back into cash and letting that ticker come down a little bit more. I prefer the weekly contracts over anything else. Now, a lot of people will say, and there is genuine truth to this, that 6-week contracts do give you the most, let's say, bang for your buck, for example, right? And the reason for that is mathematically, when you calculate how premium erodes as time goes on, that's a mathematical, truth, that 6 weeks is like that optimal or sweet spot, you might say. However, I look at risk and return, and I consider a couple of things. Number one, it's super easy to make money in the market. I know I say that a lot, and oftentimes I think people don't really, understand that. Let me know in the chat if you agree with that, or if you don't agree with that. But that should be accurate, that, it is really easy. Choose a stock you like, number one. Choose a strike price if you're selling a put at which you're comfortable buying those shares, right? The lower that strike price is away from where the stock is trading, the less likely you have to buy the shares. If we can drive an income stream or a rate of return off of cash, that's always better than having our money tied up in stock. So that's something that you want to keep in mind. Now, somebody said it's buffering. It shouldn't be. My Wi-Fi, I think I have like a gig speed. I tested my speed before. I know last week I had some issues because I was using my hotspot, but now I'm on a real Wi-Fi with a gig speed. So if it's buffering, that might be on your end. I don't think it's on my end. But you can also always catch this recording. Let me start off with this, because I think I'm actually a couple of weeks late. I had, let's see, let me shuffle this. I put all the names in this wheel of names online. I had reached out to the community here about a few weeks ago to encourage you guys to let me know what it is that would be helpful as I'm building these applications to help traders with, making more money, not just making more money, but really like, helping them figure out trades, calculate rates of return, automate things instead of really like struggling by yourself. So a lot of you guys had a lot of really good suggestions, and I appreciate that. And I did say a few weeks ago that I was going to draw a name in order to win. There's no fee or anything to win an hour one-on-one. So, I have a lot of experience, and not to be boastful, it can be helpful for a lot of you, or all of you, actually. So I'm going to raffle off 3 names actually, because I'm a little tardy. So I always think of, like, if I didn't do exactly as I intended, I always really want to follow through and do what I say I'm going to do. That's important to me. And because I was a little bit tardy on raffling this, I am going to raffle off 3 names. So let's just start there. And I'm just going to, let's see, spin the wheel. And I'm going to reach out to you, or I encourage you, if I call your name, that you reach out to me. Some of you guys have had emailed me content, and then some of you had just written something on YouTube. So if you emailed me, I have your email address, and if you put it on YouTube as a comment, I have your YouTube screen name. So I don't know who this is, mzshell.chung@gmail. So you're the first person. I'm just going to take a picture of this so I can send you an email, and we can schedule something. It's totally free, and we can walk through like your info, answer questions one-on-one, and I think that would be cool. So that's one person, and I'm going to spin it 2 more times, then we're going to get rocking and rolling. Yeah. Let's see. Second winner is Penn Fiedler at sbcglobal.net, and I'll send you an email as well. Thank you for the information, by the way, and the suggestions. Much appreciated. And one more. I'm going to do one more. And these are all random, by the way. I wanted it to be big money, because I know that you've commented a lot on here. Hoffman, you've commented a lot as well. So I am grateful to all of you guys in my community. Thank you so much. I'm going to send all of you an email later on in the day, and we can schedule a one-on-one. So let's get started. I'm going to change the structure of this live stream a little bit, because as I mentioned a moment ago when I hopped on the call, when I first started it, I was, initially I had moved over some money, $5,000 into an account to show you guys exactly how you can, make money on a consistent basis, just selling options with a small dollar amount. And I thought that would be very, very helpful for you guys. And I hope that helped. On an ongoing basis, I'm going to pause that for a little bit. And the reason why is this: my main account, I never live stream, because I just, I'm a private person. I don't want my stuff on public, especially for free, like out there in the ether, right? So I never do that. I never did that in the past, and I'm not going to start now, which is why I moved that $5,000 in order to show you guys. But I want you guys to understand that options trading is the same, whether you have $5,000, $2,000, $10,000, $20,000, $1 million, 500,000, whatever that number is. The only difference, the strategies work the same. Number one, sell a put on a good quality stock that you're okay buying. Choose a strike price that you're okay buying those shares. Have money on the side. If the stock dips down, you want to either buy more shares or sell another put, and ultimately perhaps buy more shares if you get assigned, in order to average your cost down. It works no matter how much money you have. The only difference is this one main difference, and that's it. What ticker can you trade, right? So I was trading Mara because it was a $5,000 account. I'm pausing on Bitcoin and crypto at the moment, which is why I'm changing this structure as well. Crypto, I think long term is very, very good. Although recently there's been some news suggesting some Jeffrey Epstein being Satoshi and Bitcoin and some things like that. I think that's one of the reasons perhaps why Bitcoin has dropped a lot. A lot of these companies, MicroStrategy as an example is a perfect example. Issuing new shares and diluting shareholder value. Those sorts of steps makes me uncomfortable. So I'm going to not personally put my money in Bitcoin or cryptocurrency at the moment. And so I wanted to change the structure of this and really shift to a very important, very helpful Q&A structure. So what I'd like to do is I want to go through all of these comments. I have my iPad here, right, on the side, and I see all of your comments. And what I want to do is go through and show real life examples and walk through your trades, your questions, and help you be successful. Listen, this is not rocket science. I think I had a call earlier with a small group that I help, this February group. So if you're on this call and you're in that group, you already know this. But if you're not on that call, you might not know this, that oftentimes I think we as humans, we just make things more difficult than what it needs to be. Trading does not need to be hard. There are just some basic things. Sell a put. If and when you get assigned, sell a covered call. We talk about deltas a lot. We're going to continue to do that, and we're going to continue to help you. I'm going to continue to help you be successful and just focus on the important things that you need to know. It doesn't have to be hard. You don't have to have a whole bunch of indicators in your platform. You don't have to, look for perfection, look for the top, look for the bottom. We're not fortune tellers. All we want to do is get up to bat as if it was a baseball game and hit singles and win the game. And the biggest focus is realized gains from week to week. Week to week is really all I do. I don't really look at extended periods of time. So let's just jump right in. I'm going to go through some of these questions. Premium Wheeler says, I like selling puts 1 week or max 2 weeks out. You never know what a stock can do in that 1 month. I like to collect my premium weekly because it's my income. Man, I could not have said it better myself. Props to you, Premium Wheeler. That's totally, totally true. Not only do you want to make income every week, I mean, if you have a regular job, you want to get paid every week, every other week. I mean, that's standard, right? But most importantly, we don't know what the market's going to do. So it is true that the sweet spot is like 6 weeks mathematically if you sell a contract. However, in my view, you have a bit more risk because it gives you that much more time for that stock to do things that you don't want to see it do, right? So 1 week, maximum 2 weeks. I could not say it better myself. So Marcel said I had SoFi put $25. Let's look at SoFi. So let's go through that for Marcel Frank. I'm going to pull up SoFi on my list here. Let's see. Oops. Sorry about that. For some reason, I can't find my mouse here. Just give me 1 second. Let's see. Holy cow, where did my mouse go? Oh, here we go. Sorry about that. I am not tech savvy. I know I've said that a bunch of times before. Let's look at SoFi. So I always start with a 1-year chart, right? 52 weeks. And we'll see. Marcel had said it. It's been difficult. Look, it's kind of dropped. So a couple of things that you want to keep in mind. And again, when you get exposed and you listen to this content over and over and over again, it's going to start to click it if it hasn't already. It will become easier. It's kind of like riding a bike. Oh my gosh, it's so hard. I'll give you an example. Riding a scooter. I lived in Bali for a couple of years, which was an amazing experience. And one of my favorite things was riding a scooter out there, right? And at the beginning, I was petrified. Oh my gosh, there's like no road rules and you're driving on the other side of the road and just skipping through traffic or on the sidewalk. And it was very hectic. But with experience and with practice and repetition, it becomes like it actually became one of my favorite things to do. Options is very similar. At the beginning, it can be challenging, but once you get the hang of it, there's only a few different things that you really want to be aware of. And once that starts to sink in, that will become easier. So we'll look at SoFi here. And it had dipped. It dipped from $28 all the way down to, let's see, what's this low over here? $19.19. You want to keep this in mind, number one. I'm going to share with you a lot of the mistakes, in my view, what are mistakes that a lot of other people make. Number one of the main mistakes people make is they trade too many contracts. Just start with one stock, start with one contract. That way, if the price dips down, you can sell another put at a lower price. And then you have more shares because here's what happens. If you sold a put, let's say at $25 and you own the shares at $25 and then it drops to $20, it's hard to sell a call and get very much money because as the stock dips down, you don't get as much money in premium, right? But if you only start with one and you have more cash on the side, you can sell another put. Like right now, if I owned 100 shares of SoFi, and I don't know if that's SoFi, I'm gonna say SoFi, and I don't welcome any corrections. It's just whatever it is, SoFi. But if I own 100 shares of SoFi at 25 bucks and right now it's 21, I'm going to look at selling another put, because if I did that trade on SoFi initially, that means I must like the stock. You have to like it and you have to be okay with holding those shares if you're going to trade it. So let's take a look. I mean, we can look at the options chain here, right? So today's Monday. Go with Friday. So again, this is not rocket science. We're just going to look at this week. So if I have 100 shares at 25 bucks, I'm going to look at, let's say, maybe a $20 contract, right? So right now SoFi is at 21.40. I just look at a couple things. I look at the delta. Delta is a statistical cheat sheet way to know the likelihood that the stock price is going to drop below the strike price before it expires, before the contract expires, in this case on February 13th. So if I'm looking, let's say as an example, if I'm looking at a $20 strike price, it has a 17 delta, right? So there's a 17% likelihood that the stock is going to drop below $20 before the contract expires on the 13th. It's much more likely that it's going to stay above that price. Does that mean it's not going to happen? No, but it gives us an idea, a general likelihood. And this contract is trading at 15 bucks right now. What am I going to do? I'm going to calculate my rate of return and see if that's a good deal. Now, $15, some guys might say, okay, that's not a lot of money. You don't want to look at the dollar value. You want to look at the rate of return. 15 bucks, and let's just take commissions into account. Let's just say $14, because you do pay a small commission, typically 60, 70 cents, something like that, when you trade a contract. So we're going to look at it on a net basis. Let's say $14, and this was for a $20 strike price. So I'm going to divide that by $2,000, because $2,000 is the price that I would need in order, if I got assigned, I would need that money in my account to pay for those shares. Now, you could use margin, so we're not talking about margin right now, but if you're not using margin, you need 2,000 bucks to have to buy 100 shares at 20 bucks if you were to get assigned on this contract. So all I'm going to do is divide my premium into the capital I need, equals 0.007, 0.7%. But guess what, guys? You're making that for 1 week, right? Because this is a February 13th contract, and today's Monday. This is for Friday. So what am I going to do? I'm going to multiply by 52, because I want to annualize my return out to see, okay, if I do a trade like this every week, and by the way, there's tons of trades all over the place for big accounts and small accounts alike, where you can make money like this. You're making 36% on your money. Is that better than your bank money market account paying like 3%? Is that better than your mutual fund and those, I don't want to say bozos, but the clowns, I don't know. Those guys that run those funds that like brag if they're making 10%, nobody's ever going to treat your money better than you will. And using strategies like this, you can make yourself this kind of return, 36% on a regular basis. So anyway, I hope that helps for Marcel. Let's see. And by the way, Marcel's in Amsterdam. Super cool that we have an international audience here. Let's see. Somebody had mentioned personal emails in a stream. Okay, hey, I'm sorry. I was giving away free stuff. So yeah, if that was something that you guys didn't want to see, then my bad. My apologies. The intent of spinning the wheel like I did was because a few weeks ago I had encouraged you guys to reach out and share with me what you guys want to see, right? Like what kind of content. I'm here spending my time for free, by the way. I make a tiny bit of money on ad spend, maybe like, I don't know, I think last month I made like $250. And I can tell you that the videos I make on YouTube take me about like 3 hours each time. These streams I commit to, today I was planning on going about 45 minutes. So if you calculate how much I'm making, right, in revenue from ad spend on YouTube, not that you guys pay that, it's very, very small. So anyway, I thought that was cool. But if you're offended, hey, there's always somebody in the group that's going to be offended about something. So my apologies. Whatever. Let's move on. Let's see. So Premium Wheeler has a couple things. Let's see. You said a few things. Let's go through that. I wonder, Just give me a moment. I just want to read through some of these. I love that you keep it simple. Why do other YouTubers that talk about selling options overcomplicate this strategy? That's a good point. I think that, first of all, I think, again, as humans, we are like attached or attracted to making things difficult and making things harder than what they need to be. They don't need to be hard. Listen, you just need to sell a put. If and when you get assigned, you sell a covered call. You stick with tickers that you like. You stick with strike prices that you don't mind buying those shares at. You make sure you have cash on the side to buy more shares if and when the price comes down. And it really doesn't have to be harder than that. Hyms. So Dira Jadea mentioned, and I'm sorry if I pronounced that wrong, mentioned Hyms. So we're going to look at Hyms for a moment here. Let's take a look. I think that's already in my list here. Let's see. Just a minute. Okay, so Hyms, I always start when I look at something, and I never traded Hyms, by the way. However, it has been popular. I've had a lot of comments from viewers here talking about Hyms. And so I always start with a 52-week chart. Let's see. So here's where Hyms has been for the past year, right? It's been as high as $72 per share and as low as 19 bucks. So super high to super low. Let me see what your question is or your comment. Tumbled down around greater than 70% in the last few days. I have stocks at $30 and it is now, and by the way, thank you for all the love that you guys are sending. I love that you guys send love emojis. Appreciate that. Let's see. So I have stocks at $30 and it is now at $18.50, right? Premiums are low to sell covered calls. Already sold $13 puts to average down. Any suggestions on covered call side? That is a great question, and I'm glad that you asked, and that's great for learning. Let's walk through that together, right? So let's take a look at the options chain, right? So again, we want to kind of make sure that we look at that and we see weekly contracts here. We're always going to just look at 1 week. So we're going to take a look at 1 week. We're going to look at the current price of Hyms, which is $19.17. Down, by the way, it's down 16% today. Significant. And a couple of things I want to point out. You can, whoever you're trading with, generally you can kind of customize your page. Get the dog, please. Now. Sorry about that. My dog is like whining in the background and he was distracting. So one thing that you guys want to keep in mind is that regardless of who it is that you're trading with, you can customize these pages. And I always encourage people, and this is how I have my screen, I don't really care about the dollar value that something is up or down. I care about the percentage. Also, same thing with premium, like we walked through a moment ago. I don't care so much about the premium. I care about the percentage, right? So I want to see that, okay, now Hyms is down 16% today. That is the best time to sell an option. Now you want to keep in mind a couple things. Number one, you want to make sure, is that the same company that you thought it was when you first started trading Hyms, right? So when we think about averaging down our cost basis, we don't want to just do that blindly, right? We want to make sure that it's still the same company. Now, stocks go up and down for a variety of reasons, right? They can go up or down because of, big blocks, either buying or selling, pushing the stock up or pressing it down. It could go up or down based on news, obviously, earnings, lots of different things. Perhaps if the company is issuing new shares and diluting the share value. So there are a few things that you want to do. You want to go through the Edgar page to see if there's something that you're not aware of. I'm going to have an event just focused on that because I think that's so super important. But in the meantime, I'm not going to jump too much into it, but I am going to kind of go on here. You're just going to go to the SEC website, sec.gov, or if you don't know where that is, you could just put SEC Edgar and it brings up search filings, right? A link right here. And you would put the ticker in here, Hyms, right? And then just click on that. And then this kind of shows you all public companies are required to disclose certain information. So when people buy, insiders rather, not just regular people, but when insiders, it might be like controlling shareholders of a public company or officers or directors, CEO of a company, somebody big, when they buy or sell any shares, they have to disclose this. So you'll see that on here. And the reason why that's relevant is because, let's say, I'll just give an example. Let's say Warren Buffett has a big position in Hyms and then he sells a big position, right? That's something that you should want to know, because is Warren Buffett smart? Heck yeah, he is, right? So if he's selling his shares, maybe the company has, maybe there's something that you're just not seeing. So you want to go through this. 144 is when structured sales. So let's say, the CEO of a company is structuring to sell a certain percentage or number of shares. They structure that where they sell, 10,000 shares, on the first of every month or something like that. That's a common thing. Again, I don't want to go too deep. I'm going to have an event that walks through that because there's a lot more to it. But you want to take a look and see, is it the company that I thought it was? Assuming it is, if it's still a great company that you like, if you were buying it at $30, you should also like that stock at $20, because why? It's on sale. So as long as nothing fundamentally has changed. So assuming that, and I'm not suggesting that it has or hasn't. I personally don't trade. I've never traded Hyms. It doesn't mean it's not a good company or anything. But assuming you still like the company, now's a great day to sell a put. So let's take a look at that. Here's what I would do, if I were you. So let me just go back to your message here, Dira. Let's say if you have a bunch of stock at $30, let's say, and right now the stock is at $19, let's look at selling another put. For example, and maybe we want to go pretty low because, the stock price is low. Let's look at an 11 delta. I'm just saying, let's just have a starting round, right? 11 delta is a 16 strike. It's going for $17 a share, right? What are we going to do first? We're just going to calculate the rate of return just to make sure, what does it look like? $17, if we're making $17 on that trade, and we're committing to, we're looking at the 16 strike, so we're committing to $16 per share. That is going to be 1% for the week, right? Because this is a February 13th contract. If I annualize that out by multiplying by 52, we are making 55% on our money. It's very conservative in the sense that it's pretty far away from where it's trading. The reason why it's got high premium is the volatility is super high, 152%. So the higher the volatility, the more premium you get. Also, if we look at the chart, not to be a chart wizard or anything like that, but it's come down a lot in all this time. So when people are freaking out, puts are going for more money, right? Because it's like a premium. It's kind of like, COVID happens. I'll give you an example. COVID happens, everybody's freaking out, and you go in the store and you can't find toilet paper, right? You guys remember those goofy jokes? It's because everybody's freaking out and buying a bunch of stuff, and if you can find something, maybe the price is more expensive. This is the same thing. The prices come down, everybody's freaking out, and you're paid more for committing to buy those shares. Also, you want to see, if I have 100 shares, and I had shared a spreadsheet with people previously, and I'm in the process of putting those into easy to use applications, but just to show you how easy it is to do on a simple calculator, if I own 100 shares at $30, let's say, and I buy another 100 shares at $16, I think we were looking at a $16 strike price, I'm just going to add 30 plus 16, and I'm going to divide by 2, right? That means if I was to get assigned on those $16 shares, right, my average price becomes $23. Now I only need a little bit of a pop to get back to where I started. Listen, I want to take a moment and talk about this briefly. There are 3 things that you can do when a stock goes down, right? You can freak out and sell your shares, right, as an example, and take a realized loss, because if you paid $30 and now you sell them at $20, that means you're moving a paper loss into a real loss. So now that actually hits your pocket, your wallet, right? That's number 1. Number 2, you could just be like in petrified mode, not do anything. Oh my God, like the world's gonna end, the sky is gonna fall, and I just don't want to do anything. I just want to put my head in the sand. You could do that. Or you can embrace it. Assuming you like the stock and you liked it at 30 bucks, it should be a better attraction at 20 bucks. You can embrace it and sell another put or buy more shares. I think selling another put makes more sense because you're taking in premium and then you're only buying shares if it drops further. And then if and when you get assigned, you're averaging your price down. So that's really the easiest, the best way to turning a losing position into a winning position. So hopefully that helps for you. Let me go through some of these questions. Let's see. So Patrick asked, is 36 a good rate of return? I don't know. It depends on whether you think it's a good percent rate of return. Personally, I try to look for things that pay a higher rate of return because I want to be able to be in a position where I can be wrong a whole bunch of times and still make a lot of money. But that's an individual decision. I would say that 36% is way better than the 3% money market rates. Not that it's the same risk. Obviously, selling puts on stock is different risk than putting your money in the bank, right? I would say it's way better than a 10% average or 8% average rate of return on a mutual fund run by people that don't care about you. That's a fact. Nobody's ever going to treat your money better than you will. So if you're happy with 36%, or let's go back to the options chain, right? So for example, let's say, this guy who's got, I forget your name, I'm so sorry, but whoever this viewer is that you have shares at, let's say 30 bucks. If you already have shares, maybe you want to even go a little bit closer to the money. So right now it's 1926. The stock is down 16%. The best time to sell a put. Maybe you want to look at closer to where it's trading. I don't know, maybe like an 18 or 1850. An 1850 strike price has a delta of 36. That's 66 bid, 75 ask. Last traded at $69. So let's take a look. 69 bucks as an example. If I use the last trade, I'm just giving you guys examples, and I'm not being exact on here in the interest of time. I just want to show you conceptually how to walk through this and how easy it can be. Let me know. Throw some hearts up in the chat. Is this am I making this easy for you guys to be able to replicate? I think it is. It's not freaking rocket science, guys. It's way easier than what most people think that it is. And I appreciate the love. Thank you. So let's go back to our example. I'm making 69 bucks. I'm putting up 1850 in capital because this particular contract is an 1850 strike price. Now I'm making 3.7% for 1 week. Oh my gosh. If I do this weekly, I'm making 193% on my money. What do you think? Whoever put that comment, is 36% a good rate of return? What do you think about 193%? Much better, right? And then if you bought 100 shares at 1850, let's just see where that would, if you had to buy the shares, 1850, you already own, let's say 100 at 30 bucks. Okay, now that brings you down to an average basis of 24.25. Look at the chart. Again, you only need a little bit. You got to wait until the stock gets here to be able to maybe sell calls again, make some more money, or exit your position. You only need a little bit of a pop when you average your cost down. So that is the best way to turn a loser into a winner. You don't want to just take losers and take the realized loss. That's the mistake. Warren Buffett says, what's the most important rule in investing? The most important rule in investing is don't lose money. Now, don't be so concerned with a paper loss, right? On paper, you're down money. You bought shares at 30 bucks and now it's trading at 20 bucks. It's a paper loss until you actually sell your shares for less than what you paid. It's paper. It just fluctuates. It's I would say it's not that meaningful. It's kind of like, okay, I own a house and there's a housing crisis. You guys remember back in 2007, 2008, like the credit crisis, right? The housing pricing went down. It's like if I own a house and let's say my house is worth $500,000 and then something in the economy happens and that deflates the value of my house. Does it matter unless I'm selling my house? No, it doesn't matter because I'm still living here or I'm renting it out or whatever the case is. It only matters if you sell it. Don't sell it. So yeah, hope that helps. Let's see. Oh, I got a lot of comments here. So somebody says, I wish you could do more of these lives instead of just Monday. Please do it on Wednesday and Friday. The more lives you do, I feel like the better I get. You know, that's, thank you for saying that. I do, an hour ago, I had this February. I'm going to have another one in March. Listen, and somebody, a couple of people commented, I think maybe one or two last time, like, about like, I don't want these lives to like make anybody think or prompt anybody to think I'm selling anything. But I will say, since you said, I hope you, why don't you do it on Wednesday and Friday? It's a time factor. So like, again, doing things for free, I need to focus my time really on finishing these applications that I'm working on. Also, I've been relocating from New York. Before I was in New York part-time, LA part-time. Now I'm really going to be more full-time in LA. And so that's obviously, I don't just trade and do free stuff on YouTube. I have a life too. So my time is a little bit limited. But that said, I have a February group and I'm going to do a March group as well that you might be interested in. That's Monday, Wednesday, Friday for an hour, where it's a small group. I only have 10 people in my February group, and we walk through, like, you can share your screen if you want. I share my screen. We kind of go through like real life scenarios, not hypotheticals, but real life scenarios on positions that people have. So if that's something that's of interest to you, make sure you're in my inner circle. I tell people there, and I also drop it here on YouTube as well in a post. I think that was like $500. $500 for 3 days a week for an entire month to go through all of, with a small group, 10 people. So is there a fee? Yeah, there's a fee, but it's not that expensive with the value that you get. So you can consider that. Let's see. So also, I stopped rolling because of you. I now only sell options on stocks that I want to own long term, and I only pick a strike price I don't mind owning the shares at. Man, you should be like, you say a lot of good things on here, Premium Willer. That's totally true. Yeah, listen, don't roll your contracts. What's rolling? Like let's use Hyms as an example. Let's say I have a $16. Let's say I sell this $16 put that we were just looking at, right? And let's say that Hyms starts to come down and it starts trading at $15 or $14. Don't buy that contract back and pay more than what you originally got. That's a realized loss. And then sell another one down the road. No, don't do that. So only sell contracts on stuff that you're okay buying, and consider the strike price, because that's the price you're committing to buy it at. So Nikki says, does the delta really help you to set your strike price when selling a put? What is a safe delta? Nikki, that's a great question. You ask a lot of great questions on here. I always look at the delta. It's like one of the biggest things I use. So here's how I set up my screen. So I look at the bid, the ask, the last, the net change in percent or dollars actually on this one, the delta. A couple times, sometimes I look at implied volatility or open interest rather. I always look at implied volatility. So let me make that correction. Open interest and volume. But the delta is probably one of the most important things on this page for me, because it gives you the approximate likelihood that the stock is going to drop below that price when it expires, right? It gives you like a metric. It's kind of like, let me shoot an arrow at the target. If there's no target with a bullseye, how do I know what I'm aiming at? So you want to kind of be as educated as possible when you put your trades in. So I always look at the delta, and I use that as my primary driver. Now, I do also consider other things. Like this other viewer had talked about, hey, I bought Hyms at $30. And let's say if you bought it a few different times at different prices, that will perhaps sway me to use perhaps a higher delta or a lower delta, depending on, my current position, if I already have shares or if I don't. Relative to your second part of your question, what's a safe delta? 5 is always kind of like the rule of thumb for being safe, especially for new people. When you use a 5 delta, mathematically, you have like a 98% likelihood you're never buying the stock. So that leaves 2% of the time you are buying the stock. And what I mean is this, and this is important, maybe you guys want to write this down. A 5 delta and again, these deltas do change sometimes, so they're not static. But when you sell a contract and it has a 5 delta, and you do that a bunch of times, mathematically, you are only going to probably have to buy the stock 2% of the time. So that means that you're going to have a lot of contracts that erode in value. that you can either let expire worthless, or you can buy them back for a very small amount of money, and lock in a gain. So that is, like, I would say, a safe delta. It's really depends on what your comfort factor is, what you already have perhaps in holdings, how big your account is, that sort of thing. Good question. Let's see. Why are people scared when a stock is at a discount, or scared to sell more puts? You got to work on your emotions and your psychology. Listen, most of trading is emotions and psychology. This is not hard. Oh my gosh, I wish I could just shake people and say, man, it's like way harder than what you think it is. It's like, seems hard at the beginning, but it's just, once you kind of understand the basic things behind it, it's so freaking easy. I think that, generally speaking, people are wired not good. I'll say it like that. So people are fearful usually when things crash, but that's the best time that you embrace the fear of other people. And when things are high, let's say the market's going up and up and up and up and up, most people are euphoric. They're super happy. They're walking on clouds. And that's the time when you should probably be a little skeptical, because highs will drop, right? So you are absolutely right, spot on. It's just, you got to rewire your brain. That's it. Let's see, we're going to go, I said 45 minutes, so we're going to go 4 more minutes. I'm going to look through some other things. Somebody says Hyms seems to have an FDA action against it. Is that a reason to not trade it? Sometimes, excuse me. So I don't really follow the news on Hyms, because I don't trade it. Certainly, if there is an FDA negative action against it, it will put the stock down. A lot of those things are blips in the radar. Like, things go up, things go down. I think I saw something. I never watched the news, by the way, but I think I saw something. I don't even know how I saw it. Maybe it popped up over here, where somebody was like killed in a Tesla recently because, I don't know, something happened, and there's like a big lawsuit about it. That's common. Like these are public companies, right? So, like, they're going to have bad things happen sometimes. And when those bad things happen, it usually pushes the price down because people freak out. But those can be opportunities for you to see past that, right? Like, am I not going to trade Tesla because somebody got killed in a car accident? I mean, that's going to happen. Are any of these things perfect? No, they're not perfect. Oh, Mizzy Blue gave me $10. I love it. Oh my gosh. So see my iPad here? It just popped up in yellow on my screen. Thank you so much. I much appreciate that. Thank you. So in answer to your question, is that a reason not to trade it? I would say no, it's not a reason. It's a reason to perhaps look into more of the company. I mean, here's what I think about. I think about ethics a lot, right? So one of the reasons why, and I alluded to it earlier, one of the reasons why I kind of paused on crypto, not because it's going down necessarily, but because there's lots of news right now that, like, Jeffrey Epstein and some, let's say, not so nice, not so ethical people are, had been involved in Bitcoin. And that's one of the reasons, perhaps, that it's pushing it down. And that's made me rethink about it. Does that mean that Mara is no good? MicroStrategy is no good? Not necessarily. Does it mean that Bitcoin's no good? No. But it does give you a reason to pause. So you have to just make those own determinations. These live streams and me helping you guys over here, it's very much like teach. I'm a big believer, like, teach a man to fish, don't give him the fish, right? So I'm trying to, like, help you kind of, like, walk through these scenarios. And that's why this structure, in all honesty, you don't need to see me trading some $5,000 account, because this content that I'm giving you is probably better than, hey, push this button, push that button. You know what I'm saying? So let's see. So somebody asked, this is really weird, but the volume is like 16,000 at the 18th strike, and the open interest is only 2. What does that tell you about Hyms? So let's take a look. So open interest in volume. So open interest, if I'm not mistaken, open interest is how many, wait, let me see what contract you were looking at. 18th strike. I don't know where you see that. Maybe you're looking at something else, because the 16 Oh yeah, you're right. The 16 strike, there's 2 open contracts and lots of contracts are trading it. Oh, that is interesting. Honestly, I don't look a lot at open interest in volume, so I don't know the answer to that question. I think that looks interesting, and that might be something that I would look into further. Um, the I would say probably like the only thing that I look at with open interest in volume is kind of like, are a lot of people trading it or are they not trading it? Like I don't want to look at these zeros over here, nobody's trading them. So I really only use those to that extent. I look at trading like this, man, it could be a rabbit hole if you let it be, right? So I don't want to go down that rabbit hole and like spend a lot of time. But that is interesting, and I'd be curious to know why that would be. But there's 2 open contracts and 17,000 people buying and selling it. Yeah, that's a good point. Maybe I'll look into that after this. And thank you for. I like your name, by the way, UFO Truth Tellers. Love it. Thank you for letting me know, and let me know in YouTube. Also, by the way, a quick aside. Listen, I had been doing a video every single day, a video post for 6 months, more than 6 months. I think I started like July 8th. And about 2 weeks ago, I took like what you might call a hiatus. I've just been busy. I've just been, like I said, relocating. The videos are a lot. You might not think it is, but it literally takes me 3 hours to post a video online. So I got to like think about what I want to do, write a script for it, record it, edit it, create a thumbnail, create a description. It's time consuming. So, and I've just been focused on other things, but I will start doing those daily videos again soon. So I'm committed to that. So I just wanted to share that with you guys. Let's see. Oh, we're over a minute. I'm going to just go through a couple more questions because I think these questions are really good. Patrick says, do you only sell puts on red candle days? Number one, I never look at candles. I only look at bars. That doesn't mean that candles aren't good, but when I started trading a long, long time ago, I don't know, bars are kind of old school. I'm a creature of habit. I like to just do the same things over and over again when they work. I love consistency and habit. So that said, I don't use candles, but I think you're also asking like, do I sell puts only when the stock is down? No. But that's the best time to sell a put. So like today's Monday and Hyms is down 15%. If I like Hyms and I already got some Hyms, man, there's no better day than right now when the stock is down 15% because you're going to get paid more. But no, I sell puts on, when it's down or when it's up, but I prefer when it's down. Let's see. Can you sell 2 puts on one stock at the same time? Billy says. Yes, absolutely. But just start with one. Just do one. And the reason why you want to just do one contract, no matter how much money you have, it doesn't matter. Just start with one stock and start with one contract, because if it comes down, then you can sell another one at a lower price. It's just better like that. Just, again, no matter how much money you have, just do one. Let's see. Only sell calls above your strike price. I think you meant basis. So yeah, when we already own stock, we only want to sell a covered call higher than what we own the stock for. Why? Because we don't want to take a loss, a realized loss in the market. Make money, don't lose money. Focus on realized gains. So yeah. So somebody also said Bitcoin stocks will recover. I'm not worried. You're probably very true. I mean, hey, I'm not saying Bitcoin's falling apart at all. So I don't want to like use like words that might suggest something else. Me personally, I'm just taking a pause. That's all. Yeah. And I'm also focused on other things. I've been talking about these applications for a long time, and I have like really good things. I have this like amazing, very similar to Duolingo style learning application. It's almost done. Like these things take a long time to create. I'm not a coder. I'm not a programmer. I'm not even good in technology, as you guys can see when I'm sharing my screen and stuff like that. So they take a long time, and I want to finish that stuff. So right now, what I'm focused on is creating applications that I can use, like that make my life easier, as well as other people. So yeah, I'm not worried about Bitcoin stock necessarily either. I'm just taking a pause. Okay, so I think in the interest of time, because I plan on going 45 minutes today, so in the interest of time, I think we're going to cut it right there. I'm going to keep these Monday sessions. Also, I'm in the process. I already planned it. I'm going to have a live event. A few people had said in the past, like, hey, Michelle, I've had live events lots of times, different things, all options, obviously, but some focusing on more beginners, some focusing on more intermediate, different things like retirement focus, that kind of thing. I planned a weekend event. So sometimes people don't want to or don't have the ability to, let's say, catch these live calls because they're during the day, maybe you're working or whatever. So I planned this weekend event, Saturday and Sunday, February 28th and March 1st. I'm going to put I'm going to post it here on YouTube. So if you want to be a part of that, I encourage you to check out those details. It's just another opportunity to really go through live content with Q&A available. So anyway, I hope that helps. I want to thank everybody for their time. Man, that you guys are here. So many people say, man, I want to learn options or whatever, and they don't actually take action. So if you're on this channel and you're watching these videos, let me know in the comments, anybody not like trading yet, or maybe you're just getting your feet wet, I encourage you, just start with something small. I'm gonna say this before I drop off, because sometimes, I'm a big I focus on value, not time. So there's a guy in my other group that he was not trading for a while and learning, and he was talking about, like, he started with Ford. So I'm going to give you this example to leave with. Now I'm not saying I'm recommending anything. Listen, I'm just sharing information and I'm helping you be successful. And I hope that's helpful. I think it is, from the hearts that you guys send me and from your amazing comments. Thank you, Michelle. You're the best. Thanks for all you do. Blah, blah, blah. I appreciate that. So I want you guys to know I'm not necessarily suggesting, but before we drop off, instead of like paper trading really doesn't teach you anything. First of all, it's not real money, right? So there's a big difference between, like, it's like playing Monopoly, right? Like playing Monopoly, are you going to like do the same as if you actually own some property and rent it out? No, it's very different. Number one. And number two, it doesn't match up exactly, right? So instead of paper trading, trade something small. Like, so this is what this guy did. So Ford is like 1366. Hey, Ford is a big company. It's been around, I don't know, 100 years or something. Is it going to go bankrupt? I mean, anything can go bankrupt, but it's probably pretty likely to not go bankrupt, right? And he said, hey, if I have to buy Ford at, $13, $12 a share, it's okay. It's not the end of the world. So do something perhaps like that. We kind of walk through this as an example. And I'm going to use this example here in the live stream. The implied volatility is great, 73%. Open interest and volume. Again, I don't really dissect these numbers. I just look at them briefly to say, hey, a bunch of people trading it, right? $6 per contract. Doesn't sound like a lot of money, but let's look at the percentage, not just the dollar value. So if I'm making $6, now you do want to be conscious of, when you make small dollars, you're paying a commission when you buy or sell something, $1, 50 cents, 60 cents or something. So I'm going to say I'm going to net $5, just as an example. I'm going to take home 5 and I'm putting up $12.50 in capital if it's a $12.50 put, right? I'm making 0.4% for 1 week times 52. I'm making 20% of my money. Is that a good rate of return? I don't know. You tell me. Is it more than what the bank's paying you? Worst comes to worst, the price drops. And by the way, the delta on this is 12. More likely to not drop below 12.50 than to drop. Can it happen? Yeah, it can happen, but is less likely. Worst case scenario, you buy a stock on a 100-year-old company that's pretty solid, and then you sell a covered call against it afterward. So choose a stock like that you like. Man, can be so much easier. Not enough people are trading options. This can be life-changing. Who on here, before we drop off, can you see how life-changing this can be? Can you see how easy this can be? You literally only have to spend 15 minutes a day. Once you learn the basic concepts, sell a put, sell a covered call, and a couple like details in between. So yeah, I hope that is helpful for you. Shout out to Mizzy Blue again for the $10. I appreciate that. And I will see you guys next Monday. And stay tuned. Give me a couple days. But I am going to start that daily video again. I think it's a good habit for me to get into because I love talking about this stuff anyway. And I want to make sure that you guys don't like drop off because I'm not showing my face on YouTube. So stay tuned for that and just give me a couple more days to get back in that groove. Thank you again, everybody. Have an amazing, blessed day. Love to you all.